Yeah, I think everybody was hoping that payrolls report was going to clear everything up for them, whether the Fed would do 25 or 50, and of course it never does. I think when you look at the payroll growth, I mean, typically, if we're adding something like 150,000 jobs, it's not all that bad. Of course, the labour force is expanding with a lot of new entrants. But I think we're trying to kind of steer a middle course on this because, OK, things are slowing, but 6 months ago we needed a slowdown to prevent the US economy from overheating. So when it's kind of having your cake and eating it, right? It doesn't seem like things are falling apart, so I don't think we're panicking at the moment.
In your view, if we were to see a 50 basis point move then from the central bank, would that suggest that there is something badly ailing the US economy and that the market should sit back and take fright?
Yeah, it's always difficult to know, isn't it? Because you could also argue they want to get a 50 in so they don't have to do it during the kind of US election noise. I think probably if you take a holistic view at the US economy, and I don't think the labour market is the primary concern really, then I don't think things justify a 50, because if you look at the strength of consumption, yesterday the Atlanta Fed picked up to 2.5% for the third quarter. The US economy is doing okay, so I don't think front-loading easing now is all that necessary. And actually, if you did and followed that up with another 50 and really started to cut aggressively, I think that would just fire up the economy again next year.
David, I take on board fully what you're saying. Is everyone was hoping that it would clear things. It never does, as you're quite right. There's always so much contrary data, as we've already explored with you two there. You talked about the consumer and its attitudes. I'll add to that the amount they're paying for their revolving credit as well, or where they're getting their credit from as well. And you would have seen as well that the credit figures picking up, the revolving credit picking up as well, some of the highest levels we've seen since the spring of 2022 as well. So I hear what you're saying about optimism in the consumer. I hear what you're both saying about the employment market, but they are putting more money on credit cards, and that's a worrying sign.
Yeah, it is a worrying sign, but I think if you go back to the kind of the cost of interest as a share of disposable income, it's actually still at quite low levels. Now, part of that is mortgages. You just had the chart of mortgage rates up. A lot of people have locked in much lower rates. But even if you strip that out, of course, debt servicing costs are gradually rising, but they're not blowing out at recessionary levels. So I think households have room to lever up a little bit.
OK, that's interesting. Can I move over to the other side of the Pacific? Because I know you've got a big house view on China as well. We all want to see the Chinese economy do well because it's good as a floating all boats for the global economy. But they're stuttering. They've got domestic problems as well. They're going to run into tariff wars potentially on their exports as well. But what's your view on the broader economy?
Yeah, it's challenging, isn't it? I mean, we thought the economy this year would do reasonably well on an export cycle. Export today, the data was okay. It's beaten expectations. We've seen similar sort of data in the rest of Asia, and the leading indicators suggest that will continue into year end. The problem is on the domestic side, and in particular the housing crisis. So we've been, tanking now for about 3 years in the housing market. If you look at the average housing crisis, that would suggest there's probably another couple of years to go until we find a bottom. And even then, you might argue that China's crisis is worse than the average housing crisis. So I think the domestic side is clearly tricky. Growth looks like it's going to be soft next year. We might miss the target this year, and we're flirting with outright deflation. Yet the government's kind of standing pat and not really doing much on the policy side. So I think the ball's very much in their court. If they come out and stimulate, great. If they don't, they're going to have to accept much weaker growth next year, I think.